Hey Alani, good evening. Hey, good evening. I'm testing out the live stream right now on YouTube. Can you please let me know if it works for you? If the link works for you? Hey Mazzy, welcome in.
CZA, my brother, how you doing?
Good, brother. How was your week?
Hey man, it was good. I'm not gonna lie. Good trading week. Very good.
That's awesome, man. I had a great week, and then I kind of like messed up on Friday because I got a little bit lost my psychology, and I started revenge trading for no reason.
Yeah, do that.
So instead of being up 2% for the week, I went negative 6%.
Damn, bro.
I know, dude. I was catching a falling knife, pretty much.
Yeah, I'm trying my best not to do that. But I have to be honest, though, I was really tempted this Wednesday through Friday with gold, man. I've missed so many trades. I've had so many selling orders, and it was just a few points away.
I saw that, dude. Like to the pip.
To the pip, bro. Man. Hey, man. It's all good. We'll find another move soon.
Yeah, but it's good though that you're able to see that, and your bias is still confirmed. So you know you're doing everything right. Now you just have to adjust for like the spread in your broker.
And we talked over the same bias last weekends too. So as long as we have a general idea of where price is going to go, then we should be good.
Exactly. What happened to me was that I was entering in a very low time frame, and I completely ignored the 1 hour fair value gap, and price actually ended up retracing on the lower time frames into the 1 hour fair value gap, and then moving in my direction. But I got kind of like anxious and entered in way too early. Well, now in hindsight, I noticed that it was early because it still had a while to go to get to the 1 hour fair value gap. And then when I zoomed out, I was like, fuck, man. I was trying to scalp this like 5 minute, like long entry when it still had some more time to retrace.
Yeah. Yeah, gold is tricky sometimes. I cannot lie.
Yeah, I mean, they all are, man. As long as, but the thing is, like, we have to go through like the different time frames.
Exactly.
If you're trying to get an entry in the 5 minute, it's good to like zoom out, go 5 minute, 30 minute, 1 hour, 4 hour. Yeah. Make sure your bias is good.
I think this Wednesday is FOMC, right?
But we got some good stuff this week.
Yeah.
Wednesday.
Big move set up for
FOMC. Gonna do full margin.
I'm gonna sell 20 pits from price right before 2 o'clock.
I'm just gonna fucking full margin short and long and see what works out.
Yeah. I've seen on YouTube, there's these South African traders. They do the same thing. They just full send it right before news, like CPI, NFT. Some of them get so lucky, and the others, man, it's a tough story for them.
Yeah, man, there's like a strategy, right? So I learned from like these Pakistani traders.
Yeah.
They'll buy like 8 different accounts on different prop firms, and then just full send them all. They'll do 4 longs, 4 shorts, and then whichever one hits, they keep that. So now you're down to 4 accounts, And then you do the same thing, 2 longs, 2 shorts, and then whatever you win, you keep that. And now you got 2 funded accounts. And then you wait for a nice news day, and then you full send it. And then the one that wins, that's massive fucking profit right there. Recuperates all the losses you made with the other 7 accounts and then some. But you have to have capital for that, and you have to have like a really good copy trader too. And then you have to be very careful with some of these like forex brokers. With these prop firms, because some of them have like consistency rules and then margin rules, and then you might violate with them. So you have to be very careful which ones you pick.
Yeah, there's no way I wouldn't do that.
Yeah, man, it's tricky, man.
It's slippage, man, because even if like you get lucky enough and price goes your direction, one move during the news, like first 10 seconds of the move goes up, and the slippage is so terrible, that stop loss is gonna get rejected, man.
Yeah.
It's gonna kick out, and you're gonna lose all your money.
Yeah, slippage is a real thing, dude. It's last week I was like fucking around with some news, and I was like, ugh. My stop loss got triggered, and as soon as the news hit, and then it went straight to my take profit, and I was like, wait, this should never touch my stop loss. But of course, news.
Yeah.
That's why I don't like to trade the news. Dun, dun, dun. Let's see how we're looking. I'm also doing YouTube live so I can get some hours in. So that way I can get monetized at 4,000, 3,000 hours.
Nice, man.
Yeah, I'm gonna start doing some education videos soon, once work calms down a little bit for me.
It's good, man. You're doing a really good job so far. Cannot lie. Like, these lives have been really, really helpful.
Yeah, man, it really helps. It really helps out, especially with like the psyche. So just getting into the habit of just like looking at the charts and planning out areas.
It saves time too, because instead of just like throughout the weekdays, opening your charts and guessing where price could go and just charting it at the moment.
Yeah.
Prices, it just like fucks up your psyche as well. Like, so if you do this on Sunday, before any big moves happen, you have a general idea of where price could go, man. It's just patience,
Exactly. Just wait till price gets to your key levels.
Yeah.
All right. So I think because we didn't have the calendar invite, for some reason we're having some difficulties with the calendar invite being reoccurring. It worked for about a week and then it just removed completely. Looks like we haven't had enough users join us. So I'm just gonna go live with this, and then we'll post this into the live recordings, and then whoever wants to join later on, they're more than welcome to, but then they can also refer back to the video. So give me 1 second. I'm gonna go live on my OBS and start recording. Welcome everyone. Tonight's live, 7 p.m. Eastern Standard Time, New York. Today is the 28th of January. We're going to go over a couple of news this week on Forex Factory first, and then we're going to jump right into the charts. In the charts, we're going to go over indices, metals, and Forex pairs. And when it comes to the Forex pairs, please let me know which Forex pairs you'd like to go over. If not, then we'll go over a couple of ones that I do watch on the weekly basis. And pretty much the point of this live is to identify points of interest for us to pick out the best quality trades and areas in which we want to do our strategies. Now, if you have any questions in regards to like what strategy works best or whatnot, we do have a couple of user strategies that were submitted in our Discord here on Easy Algo, which you can definitely check out. I also posted into the chat previously 8 different entry models in regards to entering on the lower time frames, on the 5 minutes and 15 minutes. Pretty much look into those 8 different entry models, identify those, and then when price action moves in that way within these points of interest and with your bias, definitely take those trades as your confluence and feel comfortable in those trades. Now, when it comes to news days, be very careful trading red folder news, which is what we're going to go over here. We're going to identify the red folder news days. There is a lot of slippage, a lot of spread in regards to trading news, so be very careful. I try not to trade the news. Sometimes I do if the price action looks good for me, but just be very cautious of that, right? So without further ado, let's go over Forex Factory. Forex Factory is where I look at it when it comes to my news, and this week you are looking at the week of the 28th of January. for tonight, there is nothing happening, right, in the Asian session. Tomorrow looks like a very calm day, right? There's nothing really going on in terms of red folder news. Tuesday, we are seeing a couple red folder news. You will see the USD at 10 a.m. When it comes to USD red folder news, just remember that the entire market is not safe. So even though you're trading, like, let's say the British pound, or you're trading like Swiss francs, right, Japanese yen, Aussie dollar, Chinese yen, be very, very careful of the USD red folder news, because it affects the entire market as a whole, right? Versus any other pair that trades on the market with red folder will not affect the USD. USD will affect everything else. So be very careful with that. If you are not a professional trader, if you're not a long-term profitable trader, I always recommend do not trade red folder news, right? So we do have red folder news USD on Tuesday. We also have the Aussie dollar in the Asian session red folder, and also the Chinese yen red folder. Wednesday, we have the euro, we have the American dollar as well, twice. So we do have FOMC in the afternoon, and then we have the GDP in the morning, the employment cost index, right, for USD. If you're trading USD CAD, I would not get into a position. This is just very violent movement right here between both of these currencies at 8:30 a.m. Eastern Standard Time, New York session. So please do not trade this pair, because it's not going to be fun for you. Right. So we do have a couple red folder USD, with the most volatile being the FOMC statement in the afternoon at 2 p.m. Eastern Standard Time. Thursday, we do have British pound. We have the American dollar twice, unemployment claims followed by the manufacturing PMI. Then Friday, we have US dollar again. It feels like US dollar just always has red folder news. It's crazy. So the only nice calm day for this week that's coming up, it's going to be Monday. And pretty much every other day after that, you're going to get some volatile movement when it comes to these markets, which is pretty good though, because I mean, you can make, or you can lose as well, a good amount of profit every single day. Just make sure to have proper risk management and don't over leverage, right? So let's jump on the charts. Right now we are looking at NASDAQ futures charts. I went over this last week with you guys in regards to contracts, right? The contract high was 17,700, which are marked over here at the all-time high contracts, right? So remember, contracts are what it's worth. It wasn't the live price. We were expecting for us to test into that region, into that area, and then get rejected off. That's what we went over last week's live. So we were aiming to get into this area, which was 17,700. That was our goal. And it looks like we're now retracing, right? We had a massive candle wick on the weekly. We're looking at this on the weekly chart right over here. But we also had a beautiful displacement, right, on the way up that created this insanely beautiful weekly fair value gap. So we are still extremely bullish when it comes to like the higher time frames. Let's identify this weekly fair value gap here. And when price comes into this area at the 50% mark, that's when we want to get into a nice high quality trade. We're going to identify these values here. We do have a lot of other zones that we have identified that has not been tapped into or mitigated. And we want to maintain these levels still live. We're going to color this area here. It's going to be blue because we are bullish. All this momentum here is bullish. We're looking for all bullish positions. One little model I want to go by. Give me 1 second. It says stream paused. One moment. One model I do want to go by is we are bullish until we're not, right? So we are still bullish and we're going to continue being bullish until we are absolutely not bullish. So we're going to keep looking for new all-time highs. Let's reduce the size of these lines. They're very, very thick. We're getting a lot of bullish entries here. So let's make sure these are not over cluttering our charts. Give me one quick moment here. right? So now we just identified a new fair value gap on the weekly. All right, so we're going to label this, and we're also going to identify the coordinates. The coordinates for this weekly fair value gap is 17232.25. We're going to label this as well, weekly fair value gap, 50%. Right? That's labeled right there. Now we're going to go into the lower time frames and the daily. We're going to check this out on the daily. Right over here. Look at that daily time frame. It looks like it's being rejected from here, from the all-time high. Thursday, Friday, opening here. Looks pretty beautiful. So what we're trying to do, right? We're trying to catch this on the retracement. We are still very bullish. So what we want to see price action do, this is our retracement. We want to see price action come back into this weekly fair value gap, because that's going to be the most high quality point out of all these points of interest, right? Weekly, daily, 4 hour, 1 hour. We want the highest time frame confluence, which is going to be the weekly out of all of these, and that's available right now. So what could happen is, since it's on the weekly, it will probably tap into here, the weekly, the 4 hour, the daily, wick back up and close above here on the 50%, and then continuation back up, right? So we're going to see some kind of wick and then continuation back up, with the closure being above this weekly fair value gap, 50%. Now, it's very, very important that you remember this, right? If there is a candle closure underneath here, under this weekly fair value gap 50% mark, this entire area here becomes invalidated. Now we are looking for bearish entries, bearish positions, right? That is on the weekly. So if at the end of this week, the candle closes underneath that, we are now looking for bearish entries. We are now bearish bias, meaning we're targeting this structure here and then all other structures below it, right? We'll take an entry here, target this structure, so on and so forth. Because if it breaks through this weekly fair value gap, that's an extremely powerful move on the weekly time frame, and only weekly time frame confluences are going to mitigate that. So keep that in mind, right? So we do see this on the weekly time frame and a candle closes below it, we're looking for bearish positions. Right now, it looks like we are going into tapping in that weekly fair value gap. So that's what I'm looking into right now as well. We'll see by New York session exactly how this price movement's going to react. But now, as of now, I am looking for bearish positions. We are at a premium here as well. On the daily, what do I see? This is a daily fair value gap right here, 50% mark. That also overlaps with the 4 hour. So we're going to label that daily / 4 hour. Fair value gap 50% mark. All right, we're on the daily there. Let's check out what it looks like on the 1 hour, on the 4 hour, excuse me. 4 hour, we do have a fair value gap here. It's been tapped into, right? This is it's almost exactly at the 50% mark. But then you have this candle right here that closed underneath it. So what does that tell us? This has been mitigated. So this is no good. So now it looks like this has now inverted, and now it should be a resistance. It's gotten some liquidity here. Now price action is moving towards the bottom. You do have some resistance here, which isn't really strong. All this here has been mitigated. If you were trading this week on Tuesday, right? Actually, all these days. But on Monday actually like wicked into it and then came back out. And then it did it a couple times actually, in which you could have gotten a nice like 2 to 1 on a lower time frame. just by tapping into that 1 hour fair value gap. So this has been mitigated already. Excuse me. Let's remove that. Let's clean up the charts a little bit. Right now I'm using Easy Algo and Easy Algo SMC in regards to all this stuff that's on my charts. We're going to also tap into the trend dashboard so you guys can see a little bit clearer when it comes to like what's going on the higher time frames. Easy Algo V version 11. So right now, bearish 1 hour, 4 hour, 8 hour, 12 hour daily. We're looking for bearish positions, just a little confirmation. We do have 3 different structures here, lower lows and lower highs. Once we break through this structure here, the sell side liquidity, and we break through this 1 hour fair value gap, this one's actually been tapped into and mitigated. Once we break through that, we are now causing a market structure shift on the 4 hour, and we're looking for only bearish positions. Right now we're targeting here this daily / 4 hour fair value gap. That's where we're looking to go into. So we're looking for price action to do something up here in order for us to trigger the movement down into here. Let's go down into 1 hour. Yep, 1 hour. We have a fair value gap here. Everything else has been tapped into, mitigated. This is beautiful. This is super clean. Whoever caught this on, when was this? On Thursday. Look at that. You had this 1 hour fair value gap that needed to be tapped into with the move downside. After tapping into the all-time high, taps into all-time high, gets rejected off, comes back up to get some liquidity, right? Taps into this fair value gap 50% mark. If your stop loss was right above it, right, you would have hit 2 to 1 super, super fast. Beautiful, beautiful entry right there on the 50% of that fair value gap. Tapped into it, movement to the downside. Bearish. We are still bearish. Market structure shift for bearish. Beautiful confirmation there, right? What we try to do is get into a market structure shift first, and then we target the fair value gaps or the imbalances left over by a massive displacement. Now that we are confirmed bearish because of the market structure shift on the 1 hour, we're looking for bearish entries. This FVG tapped into the 50% mark beautifully. Get used to that, guys. We're looking at the 50% mark when it comes to these entries. Now we have another one. We have this fair value gap right here on the 1 hour. We're going to label this for you. Labeling in red. We're bearish. This line here, red as well. Coordinates for you are 17509. Right? Let's set an alert for this one. We actually might get tapped into this during the London session tonight. So keep an eye out on that. Make sure to identify that. We should also label it. This is going to be your 1 hour fair value gap. 50% mark. We're going to look into points of entry there on the 15 minutes and the 5-minute time frame. But for now, we're just going to be looking at this at the lowest time frame, which is going to be 1 hour. Right? Your entries should be at the 5 minutes and 15-minute time frame. This has been mitigated. So the only good ones after this is going to be this beautiful daily / 4 hour fair value gap 50% mark. If you don't have it on your charts, make sure to set an alert and label it. This one's available at 17323.75. That's going to be the daily / 4 hour fair value gap overlap. Very, very important. Also set an alert for the weekly. We're going to go over the weekly again. 17232.25. Make sure to have that marked out on your charts. Make sure to have your alarms, your alerts set for that. Very, very, very important. Give me one quick moment. So we have those set up here. So just a quick review. Weekly, and the weekly on NASDAQ. Identified a few levels. We identified a new 1 hour fair value gap that's bearish. That's going to be at 17,509. We've also identified the daily / 4 hour fair value gap 50% mark. That's going to be our target, 17,322.75. And the most important one out of the closest fair value gaps, it's 17,232.25. Right? Those are the areas that we've identified in regards to NASDAQ. Now, does anybody have any questions for me? Let me get 2 thumbs up in the chat, and then we'll move on to the next. Let's do some US 30, actually. Let's do some US 30 today. Let me get 2 thumbs up. All right. Welcome in. I am RHX. You guys have any questions for Naz? If not, then we'll move on to US 30. I see Mazi, he's writing a question in the chat, which is awesome, right? So we encourage you guys to always write some questions in the chat. This is a very, very casual charting session. If you have any questions, feel free to ask them at any moment. We'll go over it together. Cool. Looks like thumbs up. We are moving on to the US 30. Dun, dun, dun. US 30 on the weekly, we are still bullish. Weekly left over here. Let me remove these fibs. Love Fibonacci. Love, love, love Fibonacci. We have a weekly fair value gap over here that overlaps with the daily. So I'm going to highlight this here. We're going to label this. Mazi, by the way, if I'm delayed on YouTube, just leave that running in the background. Watch me on Discord and just mute that one. So that way it's not too delayed for you. Over here, we're going to label this. It's going to be our weekly fair value gap. We are still very, very bullish until we're not on US 30, right? Looks like this wants to just keep doing all-time highs over and over and over and over. And that's fine. We're going to label this right over here. And remove these. You have 2 different dailies over here that are overlapping. Let's remove that. This is what I want to focus on, the weekly. Weeklies are insane. So let's put this right over that. Right over the weekly. Coordinates for this are 36687.06. We are bullish. This is a weekly fair value gap. Weekly 50% fair value gap. And it overlaps with 2 different dailies around it. So we're going to put /daily fair value gap. This is going to be a very, very high quality trade. So keep an eye on that. Let's change this font. It's a little bit too big. Font's at 12. And then you have another one over here, weekly, daily, 4 hour fair value gap. You have 3 different daily fair value gaps over here. Let's go down into the daily time frame. We are so heavily bullish on the higher time frames. Here on the daily, we have a fair value gap that's been formed. We have 2 different fair value gaps formed on the daily. They have not been mitigated because it has not tapped into the 50% or a candle has closed underneath it. So this is still good. This white line that I have here, that's the new all-time highs. I'm going to have this marked out as all-time high and keep updating that because this right here, it's going to be pretty much like a moving liquidity area where I want price to react to and grab that liquidity. So that's going to be my profit targets every single time. Right over here, let's mark this as the daily 50%. We're going to mark that and we're going to label it as well. This is a daily fair value gap, 50%. This is going to be the closest fair value gap that we have here at the moment, and that's what we're going to be targeting, the area that we're going to be targeting in order to collect liquidity, and then continuation to the bullish momentum to the upside. We also have another tiny fair value gap over here in the daily. Even though it is very, very tiny, since it's on a daily time frame, it's a very important fair value gap. So let's label that. Let's label that. Let's mark it. Let's set an alert. What could happen here, actually, because we have so much news this week, red folder news, I've noticed that price action really moves on its own, even with news. So if you get the correct bias and the correct time frame, which is going to be your higher time frames, you'll pretty much be able to predict the news, right? So something's going to cause this week the price action to wick into this area here, which is a daily fair value gap with a daily order block, right? It'll wick into this area here, collect liquidity, and then shoot right back up, right? So you guys can rewatch this video throughout the week, look back into this, but it's usually what happens when you have so much red folder news back to back. You'll see some kind of like incredible price action, just tap into it, wick into it, and then continuation to the upside. Sometimes in one candle, right? In the same like 5-minute candle, tap into it, go right back to where it started. It's crazy, right? That's why it's very, very important to identify these higher time frame confluences in order to be able to catch those moves. So let's mark this one out too. It is a daily fair value gap on top of a daily order block. Higher time frame confluences. 37,39394.29. Let's set an alert on this one as well, and we're also going to label it. Set an alert over here as well. And then, where are you at? Let me just label the line. There we go. Daily fair value gap 50% mark. Cool. Now we identify that one right there as well. Do we see anything else on the daily that's nearby? No, everything has been identified. Right? The closest fair value gaps on the higher time frames. We did weekly, we did 2 dailies. Let's go down to the 4-hour time frame. 4-hour time frame overlaps with the daily fair value gap over here. Daily is a higher time frame confluence. This one's been tapped into and mitigated, and it looks like it held very well for a while until it got to this point, right? Held very well, very well. This one's still active, but that overlaps with this daily time frame, and then this one overlaps with this daily time frame. So we're gonna put daily / 4-hour, and the next one as well, daily / 4-hour. Just to let us know that there's 2 different confluences, 2 different time frame confluences right on there. We also have this one right over here. This might get tapped into in the beginning of the London session. There's no red folder news today, so this is going to be interesting to watch. This is a 4-hour fair value gap 50%. Let's see what happens here tonight in the London session. It'll probably tap into it at like around 3 a.m. my time, which is the London session open, and then continuation to the upside. Or it might just break right through it and then continue straight down into the daily fair value gap. Right? So it could do this, and then up, and then down. Or it could just literally blast straight through it here, and then back up. Because this is a daily overlapping the 4-hour, this is going to be higher quality than expecting this to go up. But it's still a 4-hour, so it still has a lot of solid liquidity in here. So we are going to see some price action happening within here during the London session open. So probably this, most likely, right? But we'll see. So we've identified areas on the weekly, daily, and the 4-hour when it comes to US 30. Does anybody have any questions for me in regards to US 30 and the areas that we've identified together here? If you guys have no questions for me, let me get a thumbs up in the Discord, and then we'll move on to the next which will be gold. Got a thumbs up. Let me get a second thumbs up, and then we'll move on. Hell yeah, rock on. Welcome everyone that's new to the server as well. Thank you for joining us. Let's move on to gold. Gold. I love gold. Gold. All right, weekly. Bearish. Let's remove these Fibonacci's. I love Fibonacci. I missed this entry over here by just a little bit. Or did I? I left this open because it's still valid. Or did I? Dun. We'll see. So on the daily, what do we see on the daily? We see lower highs and lower lows. We see bearish momentum. I'm looking for bearish positions. Over here we had a fair value gap on the daily. Look how beautiful this reacted. We identified this on last week. And then this is what happened this week, right? So last Sunday, we identified this area here. Tapped into it on Thursday. Perfect rejection to the upside. You could have done a 2-to-1 ratio on that one too. On a lower time frame and gotten it very, very fast. So let's clean this up a little bit. This level here too is very important, so I want you guys to mark it out. This level is 2010.36. Once a daily candle closes below that, look only for bearish momentum and bearish positions. And then that's going to be a market structure shift to the downside. So we'll be going bearish from that point on the daily time frame. Do we see anything else on daily? No, we do not. This has been tapped into, mitigated. This over here, this fair value gap, has been tapped to and mitigated as well. So we'll move on from there. Let's go down to 4 hour. What does the 4 hour look like? 4 hour, this is still valid for me. I have this limit order set. This is at 2046.50. Might not go up there with the way the price action is moving at the moment, and that's perfectly fine. But until then, I still have this limit order open because we do have some crazy red folder news here. And by the distance, it'll probably wick into it, reject off it completely because you have a 4 hour order block over here. By the way, to see these order blocks automatically, Easy Algo V11 and also Easy Algo SMC, they provide all of these updated automatically. So I have this 4 hour fair value gap 50% mark over here. Once again, that's 2046.37. That's a limit order that I have set. And then for everything else, there is no really clear indication of where price action is going to go. It is just ranging for now. If you look at it on the 1 hour, you might be able to get some nice 1 hour entries. And it looks like we actually missed out on this one. This would have been perfect. So it's always good to check multiple time frames when you're inside the market. So let's mark this out, right? This is right over here, down to here. It'll be bearish, but look at that. That's insane. Taps into it completely, right? Perfect wick into the pip and then rejection off it. This was on the open. So this happened, yeah, this happened an hour ago. It's crazy, an hour and 40 minutes ago. So as soon as the Asian session opened on Sunday today, first thing it did was tap into it because this is where price action ended on Friday. Taps into it, fair value gap, and now it's rejecting off it, going into the sell side liquidity. So your take profit or your structure that you're pretty much targeting, it's gonna be down here, right? And that's where you have some more liquidity, and then you have a sell side liquidity down here. But given that we have a daily fair value gap down here, that's what I would target. I'll put my take profit over here in the daily fair value gap. And if you were able to get into this position, amazing. If not, then no worries. Just look for another entry on your 15-minute time frame as well. With some more liquidity though. I would do it in the London session. I wouldn't trade in the Asian session because that could just range and just chop you out. And then, yeah, winning trades turn into losers in the Asian session just because you're trading the Asian session. So gold, bearish. We're looking for entries using the 8 entry models that I posted in the Discord. into this daily fair value gap. If this daily fair value gap has a candle on the daily time frame that closes below it, right? The body closes below it, not the wick. Then we are bearish, and then just look for straight bearish positions after that. Does anybody have any questions for me in regards to gold? Right over here, I do have this area here marked out red. This is my extreme premium zone that I had marked out, and it had rejection right off it, which worked out really, really well. So I'm going to remove some of these alerts just to clean it up a little bit. While you guys think of some questions for me. If you don't have any questions for me, give me some thumbs up in the Discord, and then I'll move on to the next pair. Let me see, what should we do? I have Euro USD right after. So we have some pretty good pairs right after. If you guys want me to chart up some exotics, some weird ass pairs, I'm more than happy to do that. You know, it's some fun stuff. Looks like we have no questions in the Discord. We're moving on to Euro USD. And guys, if I'm moving too fast, please let me know. I'm not trying to do like a speed run or anything, but I want to make sure that you guys understand. And just as every other live that I had before, this is all going to be uploaded on YouTube right after, so you guys can feel comfortable going back into it and looking at the points of interest and what we're pretty much like looking at in regards to those points of interest and how to enter them. I like to also mark out areas in my charts and what they belong to. So like you see here, July 2023, daily fair value gap 50% mark, and then a weekly July 2023, weekly fair value gap 50% mark, which is awesome because when you look at it on the weekly, look at that. That's insane. It's just a wick. It's beautiful. It's a perfect rejection. Like that's the kind of stuff that we want to tap into. And I did identify that on my previous lives, but I kept that one live because that's a wick, right? It's just beautiful the way it looks. These areas here are my extreme premiums, looking for bearish positions always in these areas, and it's already been tapped into, mitigated, and continuation to the downside. All right, let me remove this. I don't want you guys to get too confused. We're looking right now on the daily. Don't have anything on the daily except this fair value gap down here, which it did tap into and then it rejected. But then over here, this candle closed underneath it. So this one rejected, tapped into. The significant. So I have a question. When the question is, what's the significance of the wick? Why is it beautiful? So check this out, right? When it comes to like candle formations themselves, if you see a candle like this, when you see a wick, that means price tested this area, but it was unable to properly close in this area, and price action rejected it completely. So when you see a candle that's just this little body here, price action only really lies in this body. So it means that whatever is here, you have way more sellers than you do have buyers. So it's kind of like an invisible wall. So when you do it in confluence with, let's say, a weekly fair value gap here, and the candle does not close above it, but only wicks it, it just means it collected liquidity, but then the sell pressure was so strong, it pushed it back down, meaning you're still bearish. Your bias is still good because it did not break through this invisible wall. Now, if you would have something like, let's say, for example, this, right? This is a fair value gap, but the candle itself just broke right through it, through that fair value gap, and then the body closes below the 50% mark or at the edge of the fair value gap. That means that there was enough pressure to break that invisible wall, and now that invisible wall doesn't exist anymore. So now there's nothing holding it back. But when you see a rejection like this, like the wick, it means that the selling pressure is extremely strong. And when you do it on the same time frame as the creation of, like, let's say, the fair value gap, a weekly candle and a weekly fair value gap, that means this is still solid, this still holds, this is not breaking through when it comes to the weekly. Now, the fact that it's a wick means that even though it didn't break through on the weekly, it will break through on the daily. It will break through on the 4 hour, on the 8 hour, on the 1 hour, on the 15 minutes. It breaks through. So on the lower time frames, it looks like yeah, you broke through this and it's pretty much like flipped the bias. But when you look at it on the actual higher time frame of the fair value gap and the actual candle itself, you'll be able to identify like, hey, it didn't break through. My bias is still good for a short, for bearish positions. So another question. So when the candle breaks through, that what you mean by mitigated? Wicking means the zones are still valid on higher time frames. Correct. If it is on a weekly time frame, right now we are looking on the weekly, and this is a weekly zone. This is a weekly fair value gap, and this is a weekly candle. It's only a wick, so we are still good. If this was a candle that closed above it or past it, that means this area is no good at all on the weekly, but it can pass it on the lower time frames because that's how the wicks are formed. Does that answer your question? Do you feel comfortable with the wicks? Now, if you look at it on the monthly, it probably won't even be a wick. All right, so this is the monthly fair value gap, and then that's a fat wick. Yeah, you get wicks. You get wicks on the monthly. Cool. So let's go down to daily, right? What's the daily look like? This has been tapped into, right? Collected liquidity at the 50% mark, and then it's been mitigated, so this is no good anymore, even though it's tapped into it twice. Bearish bias. This has been tapped into. Candle closed right underneath it. So this is about to just go, right? So this is just ping ponging between two different fair value gaps. It's already tapped into this one, and it's already closed underneath this one, right? So just by judging by the candle patterns themselves, there's a lot more selling pressure than there is buying pressure, because the candle bodies themselves are closing lower and lower, as you can see here, lower and lower. And then all this is just wicks rejection with the selling pressure. So I'm still bearish when it comes to this. We are targeting on the lower time frames this weekly fair value gap 50% mark. So we're looking for entries into that. Let's see it on the 4 hour. What does the 4 hour look like? I'm not seeing anything on the 4 hour besides here. This is going to be a fair value gap. Once this closes within the hour, this area here, it's going to be a 4 hour fair value gap, which we're all identified right now. I'll give you the coordinates now as well. We're going to color it red. The coordinates for this 50% mark is going to be Alt H. Color red because that's what we're looking for. 4 hour fair value gap 50% mark. Oops, fat finger. All right, so the coordinates are 1.08520. We're looking at that in order to get into a short. And then our target is going to be two different targets, right? It's going to be the sell side liquidity and then also the weekly fair value gap 50% mark. So judging that it's on the 4 hour, right? It could just tap into here, continuation to the downside, or just like ping pong all the way until it gets to the weekly fair value gap 50% mark. Look at your lower time frame confluences and your points of entry with the 8 entry models that we have on your 5 and 15 minute time frames to look for bearish positions. But this is going to be your point of interest here, your 4 hour fair value gap 50% mark. You don't really have anything else, right? You don't have a 1 hour. There's not really like a daily above it. You have this one over here. This is your 4 hour 50% mark as well. And then I marked over here the entry zone for the order block on the 4 hour. So mark this one out too, right? You can probably put in a nice sell position from here. Coordinates for this one are 1.09367. We're looking at two different 4 hour fair value gap 50% marks. Those are going to be two different entries for us. And then our target's going to be this weekly fair value gap 50% mark. We're pretty much waiting for price action to go down into here, and we're trying to catch it in the right way in order to catch a nice little move into that using our entry models. If you're not familiar with the entry models, just scroll up in the Discord, in the chat. You're going to see 8 different pictures of 8 different entry models, And then you're also going to see like a small little chart pattern cheat sheet. Use those as confluences and the lower time frames inside these higher time frame points of interest in order to get high probability trades. All right, that was Euro USD. We did weekly, daily, and 4 hour. Let's check out 1 hour to see if it's any cleaner. On the 1 hour, you see this right here. Boom, taps into it, wicks off, which confirms our bias. We're still bearish, and then just continues down. You have a 1 hour fair value gap overlapping with the 4 hour, which is very important. Why? Because this area here, it is also a bullish inverted fair value gap. So this candle closed underneath it, price action continued below it. This now becomes an area of resistance. Instead of price action coming here and wicking off, kind of like this, it came into here and broke under. So now price action has to come back into this area, retest it, tap into it, and then reject off it, which is clean, right? So this doesn't really happen a lot. So take advantage of this and pay very close attention. So you see this, price action is supposed to do this and then back up. It didn't. It tapped into it. And now what's going to happen is price action is going to do this, tap into it again, but as resistance, and then die. Right? So keep an eye for that. Now you have three confluences, excuse me. You have a 4 hour fair value gap 50% mark. You have this 1 hour fair value gap, right? Overlapping as well. This area here with that. So you have 4 hour and the 1 hour fair value gap. Now your third confluence is that this fair value gap was mitigated by becoming an inverted fair value gap. So the price action closed underneath it, and now you are in an area of resistance instead of an area of support. So price is going to reject off this area. 3 confluences in the zone. I feel very confident that we can place a limit order here and then target sell side liquidity down here. Now, you do have a lot of price action in this area here, which is about your 1.08300 area. So I would probably set this as my TP1, and I'll probably set this as my TP2. This is not a signals live or anything like that. But this is what I would do, right? This is not financial advice or anything. This is just so you can see like what I'm seeing. Like, so you can train your eyes, as I've been training my eyes this entire time. I'm not a pro, but this is the most logical thing when it comes to like price action. I want you guys to get into the habit of that. Identify your structures in which price has been tested multiple times. Aim for those, because those little pockets become liquidity zones. Liquidity zones are areas where price needs to target to collect all that money that's behind it and use that as fuel, as momentum in one direction or the next. So these are the 2 zones in which I feel comfortable that price action would test and reject, or test, break through, and then test and reject. But remember, we are still bearish and we are still expecting price action to tap into this weekly fair value gap. Right? Now, does anybody have any questions for me on Euro USD? If not, give me 2 thumbs up. We're going to move on to the next pair. Next pair is going to be GBP JPY. Got 1 thumbs up in the Discord, 2 thumbs. Let's ride. We're going to GBP JPY. And once again, if I'm moving too fast, please let me know. Also, if you want me to go over a specific pair, let me know that as well, so we can go over this specific pair. Dun dun dun. Still hasn't tapped into. So this is GBP JPY. I was projecting for this to tap into this area here of liquidity, which is the daily, 4 hour, and the 1 hour overlapping, 3 different confluences, higher time frame. We're expecting this to tap into this level here and then reject towards the upside. Now I know how GBP JPY moves, so I know it's fucking with me, right? Part of my language, but it's fucking with us right now. So it's trying to juke us out. So as you can see right here, it's choppy, it's consolidation, and it's at a buy side liquidity. It hasn't tapped into this area here. This area is still a pocket of liquidity that it needs to test, because that's a huge imbalance because it's on a daily and you have 3 different time frame confluences on that, which is very scary, right? And then if you compare it to your left, you always look left. Look what happens over here, right? This is price action reacting. So price action here leaves a fair value gap. Then this fair value gap gets broken by this candle. It's a daily candle, breaks through, goes underneath. Then it becomes an area of resistance because it broke through this fair value gap. So it needs to go underneath here and then tap into it on the top. So it taps into, rejects because it tapped under and closed, right? Fair value gap becomes inverted. Now it's resistance. Breaks through, rejects. But remember, look left. You have a fair value gap here. That one's bullish. So it breaks through, wicks through, right? Doesn't break through. It shoots a wick. So it ping pongs, right? Closes under. Now it needs to continue down. Then it ping pongs up here to this inverted. Gets rejected. This now, instead of breaking through this fair value gap, you have an order block and also this area here of resistance. Taps into that, continuation to the upside. It's very important to look left. So as you can see here, this level here, the daily 4-hour, 1-hour fair value gap has been tested multiple times over here as well. You see, you can tell by the wicks and how the candles close like almost exactly below or almost exactly above it, this line. Now, if we zoom in a little bit closer to, like, let's say the 4-hour, the 1-hour, you'll see that it actually rejects off it completely with wicks on those lines. So it's always good to look left. Let's check it out. Right? So we're looking at it on the 1-hour now. So look at that. This area is a very high quality area. Wick here. Wick there, right? Wick. Candle body is sitting right below it. But wick. Candle body is above it. Right? Candle body is sitting right above it. Candle body is sitting right below it. Wick. And then this one closed underneath it. But then wick. Right? So you guys can see. Like, it's insane. So this area here is a nice high quality area. Now GBP, like I said, likes to juke you out. So that might actually even be invalidated. But there's a lot of confluences happening in that area. You also see here, right? To the pip. This area here was a previous area that was tested and completely rejected off. Right? That became a buy side liquidity area. So the next time something came through there and closed, we're still bullish. Right? There's a lot of confluences going on in that area. You have this rejection here. You have this inverted fair value gap on the daily. Support, resistance zone. You have this fair value gap here. Daily, 4-hour, 1-hour. It's just a lot of confluences. We need to get up into the zone. And how do we get up into the zone, right? The weekly high of February 2015, which is 190 flat. We need to collect liquidity. Anytime we need to have a hard push in one way or the other, you need to collect liquidity. We have to scrape everybody's money. And then this area here is a fat area of liquidity. Now, in order for it to get from here in this area from the buy side into here, we need some violent movement, which is going to happen this week on Wednesday. So on Wednesday, we're going to have red folder. And then also on Thursday, we're going to have red folder news that's going to affect this movement. So 2 things that could happen. A violent move wicks into here on a daily candle. Rejection. And then the next target is going to be over here. The 190 flat. Second thing that could happen is violent move with the candle closure below it on the daily, and it completely mitigates his entire move to the upside, and we are now bearish. So keep a close eye on that, guys. And I will repeat, if the daily wicks into here with red folder news violently and then rejects off it, this is our target. If on the daily there's a violent move with red folder news and the candle closes on the daily below it, we are now bearish. This move is invalidated. So keep a very close eye on that. So you have two things, right? Just wait for the wick, and if not, candle closure. And then our entries are going to be on the lower time frames. Let's go down to 4 hour. Let's see what we see on 4 hour. On the 4 hour, we see a fair value gap right over here that formed on Friday. Has not been tapped into yet. Let's identify it. GBP JPY can be very, very tricky to work out sometimes for me because I barely trade it, or better said, I don't trade it anymore. I used to trade it in the beginning, but it was very difficult for beginners to trade. So if you're a beginner, try not to trade it because there's a lot of variables that come into action when it comes to GBP JPY. Could I share my easy algo settings? Sure. I have a couple different settings. I'll post them right here into the Discord. Post them after the live. I don't have too many when it comes to like the support and resistance because I look at my levels by marking them out with the fair value gaps. But either way, I'll share those for you. This level here, the 50% mark, we're going to color this blue. Coordinates are 187.850. You are a 4 hour fair value gap, 50%. Right, lower time frames, we could see price touch into that, reject, and then probably continuation to the downside. But right now it's consolidating, so it's going to ping pong between different structures. It'll probably target this buy side liquidity, break through it a little bit, and then break through the sell side liquidity, tap into here, continuation to the upside. So expect price action to ping pong between this buy side liquidity and this sell side liquidity until it gets to this daily and wicks off it, or it gets to the daily and closes below it. Does anybody have any questions in regards to GBP JPY? Let me get 2 thumbs up in the Discord and then we'll move on to the next pair. Guys, let me know what pair of Forex that you'd like for me to go over as well. So it's not just me ranting about pairs that I'm watching, right? Anyways, at the end of the day, I only watch like 2 to 3 pairs on the weeklies. I probably go through my NAS, gold, and Euro USD because I like to get a feel for those pairs. Some people actually recommend just like focusing on one pair. If I were to focus on one pair, I'd probably say Euro USD is a little bit more friendly for those that want to get into the Forex. NAS is tricky to trade, but once you get the feel for NAS, it is so worth it. It is so satisfying. But Euro USD pretty much moves with the same kind of movement and price action as NAS. So it's kind of like a baby NAS is what I usually call it, because you get the same moves, but not as violent volatility behind it, but you do get a good enough amount of pips being moved every single session, London and New York, with the exception of Asian session, of course. So definitely check it out. So a question in the Discord. So you mostly use Easy SMC. Do you happen to ever combine that with SEP? What is the most friendly Forex for beginners? Euro USD is the most friendly Forex for beginners that I've done. You can also try GBP USD, and then for usually use Easy SMC. Yes, so I usually use Easy SMC because it falls more in line with my trading style. But I also have, if you can see over here on the top of the structures, you see this little X? That's from Easy Algo. So it's very important for me. So when I'm actually trading and going into my entry models, I'm looking at 2 different things. Well, I'm looking at a few things actually. So just to keep it simple, this reversal here, right? The reversal X, that's provided by Easy Algo For me, it's very important on like a 15-minute time frame because that's when I'm feeling a little bit more comfortable getting into the trade. Now, when I overlap that with my easy oscillator, so let's say, for example, this was like a 15-minute time frame, I'm getting a bearish divergence, and then on the same candle, I have a bearish reversal signal. Those two pretty much confirm my entry's good. Like, now's the time for me to get into the entry. Now, we do have different user strategies that go over detail, like how people trade their strategies and how do people get into the entries. But like I said, I also have 8 different entry models here on the Discord that you can look at. I don't suggest any user strategy over another. Pretty much feel them out, trade some demo until you finally get something that feels more comfortable to you and you feel better trading versus trying to learn so many different strategies at once. Just pick one strategy, get good at it, demo it until you're profitable. And if you do that for like a month and you don't like it, then go to the next one. But try not to switch up strategies every single week because you'll never learn anything. And that's what happened to me in the beginning. I was doing so many different strategies that I was bad at every single one of them until I finally got a little bit better feel for what I wanted to look for. So I do use a couple different combinations of different algos, but mostly easy algos. So easy algo oscillator, easy algo SMC, easy algo itself, the original, but I use different parts from every little thing. And then also for my easy algo, I have this trend, the trend time frame, the trend charts on the bottom right over here. I look at that too. So when I'm in a trade, I'm like, okay, I got all green lights, so I'm looking for all bullish positions. So my bullish position is confirmed. I shouldn't have too much trouble. But then when you start seeing, like, let's say your 1 hour is bullish, and then 4 hours bearish, and then 8 hours bullish, and then 12 hours bearish, and then daily's bullish, and then weekly's bearish, you're in a chop. So be very careful trading that. Try to go with the trend, right? The trend is your friend, and using the trend indicator kind of helps you just to eye that out. But either way, just keep going through your charts. You do daily, 4 hour, 1 hour, 15-minute, and you can identify your trend through there. Another way that I would identify trends too is your daily candle. If your daily candle opens above the previous, right, daily candle closure, then I'm looking for bearish positions. I'm bearish bias, right? It's a little shortcut, but it's not 100%, but it's the easiest way to start looking into your bias. And if my daily candle opens below my previous, then I'm looking for bearish positions, right? So little shortcut, and then just look at your 4 hour and 1 hour to see like how your price action is moving. And then if you want to, additional confluence, just look at your daily candle open, compare it to the trend meter that you have with easy algo, and then that's your bias, right? My daily candle opened above my previous candle. I'm looking for bullish positions. My trend indicator says I'm bullish, so I feel good for being bullish. Wish there was a clear path for how to use the easy algo, SEP, easy SMC, etc. So I mean, they're all 3 different strategies. There's user strategies in the Discord. Let me link you guys to it, right? So I'm going to copy and paste here in the Discord. Where are you guys at? The user strategies. I'm going to copy and paste that right there. So you can use those. Sniper Entry Pro has its own like dedicated channels for the strategies, and they also have a couple YouTube videos. Easy SMC has its own videos as well on Easy Algo YouTube, and then Easy Algo has its own videos as well. Now in the future, I'll probably do a couple more Easy SMC videos because that's what I pretty much use and I'm more comfortable with, just to help you guys feel a little bit better about that. And if you have questions in regards to those indicators, just put them in the Discord, put them in the pro chat, and then we'll go over that, and then we'll make those videos happen for you guys so you guys can feel comfortable. Yeah, for sure. So version 11 videos will come out soon. I think Matt has already started publishing a couple of those as well. Let me do one more pair for you guys, and then that's gonna be it for me for tonight. Whichever first pair in the Discord. And then for all my late joiners, just know that this is going live on YouTube tonight. As soon as we're done here, I'm gonna edit it, submit it to YouTube, and then I'll post it inside the live recordings channel, which I'm also going to link down here for you guys. So that's inside the Forex analysis channel. Dude, you're a savage. USD CAD. Oh, you weren't here in the beginning, right? So let me just show you something real quick. A little quick. So check this out. You are a savage. On Wednesday, is it Wednesday? Yeah, Wednesday. Wednesday, you have red folder CAD and red folder USD. So whatever you do, don't trade Wednesday. Otherwise, you're gambling, because what the hell? They're going to be fighting against each other, and they're both extremely volatile news. But without further ado, let's check it out on the charts. Me, I personally don't trade CAD pairs, but you guys love for me to mark them up for some reason. Whatever. So let's check this out. And this daily candle has been mitigated. Or have you? No, you have not. You are about to be mitigated, right? So once this one closes, you have a fair value gap right over here. This one I've had already, but this one's broken through. But now it looks like this is forming over here. But I don't want you guys to get confused. So until it forms, it's not confirmed. Look at this. This was beautiful. This is a fair value gap that we identified a couple weeks back, right? We identified this, in December. We identified this fair value gap. We're looking for short entries into here. This daily fair value gap 50% mark. This has been tapped into and mitigated. Wick. Right? Only thing is, higher time frame, like the market structure, we are bearish. But it looks like we're in a retracement down here. Consolidation in here, right? Ping-ponging. The only thing is, like here in the daily, it needs to be rejected off here. And then we have continuation to the downside. Closure, candle closure on the daily underneath here confirms our bias for bearish. And then we'll be targeting this sell side liquidity. This fair value gap here has been tapped into and mitigated, right? So just think of it as like an invisible wall. If you break through the invisible wall, right, this is penetrating it, and then you try it again. Pretty much think of this as kind of like a glass wall. If you fracture it with just a wick, it's completely vulnerable. So now that's not really going to hold up. But if it never like broke through here at all, kind of like this, then you're still good. But the fact that it broke through with a wick, it's cracked, it's vulnerable. So this has been mitigated. So this might not even hold up at all. So expect this not to hold up, right? When it comes to fair value gaps, if you wick in through it, it's been mitigated. Expect it to like break through eventually. A little bit more easier the second time than the first, right? So this here is a daily. It's developing as a fair value gap on the 4 hour. Let's check it out. We're looking for bearish positions. What does the 4 hour look like? Broke through. This is not going to hold it back because you have two different candle closures like right under the ending of the fair value gap. So that's pretty much just letting you know like this is going to get broken through. Do you have anything here? No, because this has been tested on both sides. There's no fair value gap. Now it's just going to chop up between this and here. So it might ping pong through that. But this is choppiness. This is no clear indication of where it's going to go. There is a fair value gap here though. We're looking at this on the 4 hour. You have that. And now, if you're using like the easy algo indicators, this order block here, you have a 4 hour order block as well. So you have a 4 hour fair value gap here, and then you have the entry to an order block. So that pretty much gives you a little bit more confidence going into this trade, knowing that this is going to back you up. Now, the 4-hour fair value gap here in the 50% mark, you can see like there's been a lot of price action that's been rejected and also supported up above. So price action has reacted in this area here. So it's an area in which price action has reacted to a lot. So we're going to be looking at this area here. All right, we're going to mark this. This is going to be an area for a bearish position. This is 4-hour fair value gap 50% mark. Perfect. I'm going to color you red. Coordinates for that are 1.34834. Right? That's the coordinates for that. And then that's what we're looking at right now. This one over here has been mitigated. It's closed above it. We're going to delete that just to clean up the charts a little bit better. Wow, that's beautiful. The daily fair value gap 50% mark here. Tapped into it perfectly and rejected off it. Your next area here too is this fair value gap 50%. So you can probably use that as a take profit because it's also sitting above a fair value, an order block. This one we're going to color blue for bullish. And this is also in the 4-hour. Price action is very choppy at the moment, right? It's very choppy, very indecisive. We're not going to label the 1-hour, but you can definitely look at the 1-hour yourselves and see like how that's going to work for you. This one, its coordinates are 1.34042. This is a 4-hour fair value gap 50%. Four-hour and then 4-hour. Yeah, we have those zones. So probably ping pong between everything down here. Yeah, it's gonna get a little squirrely. All these areas are probably gonna get tapped into with the way the news is this week. It'll probably just wick into every single one of these areas and reject. Price action is gonna be very violent, so be very careful with that. Check out the OTE zones. Looks pretty good. All right. So does anybody have any more questions for me in regards to USD CAD or any other questions whatsoever? If not, guys, give me some thumbs up, and that's gonna be it for this evening. Awesome, guys. Thank you so much for joining me tonight. It was definitely a pleasure, guys. It's my pleasure for real. Like, thank you so much for joining me this evening. Thank you for going over these charts with me. I hope you guys all have a very profitable trading week. If you did not get a chance to watch it from the beginning, remember I'm uploading this on YouTube Live tonight. It's going to go into the live recording session on Forex for you guys first. And then on Tuesday, I release it to the general public. But since you guys are Easy Algo Pro Discord members, you guys get the first pick and you guys get to ask the questions when it comes to these lives. So thank you very much. Have a profitable trading week. See you next week, same time, same place, 7 p.m. Eastern Standard Time, Sunday night. Good night, guys. Thank you.